Hello and welcome to HiWayFX market news for March 16, 2016. The key currency pair Euro-US dollar trades near the mark of 1.11 ahead releasing of the Federal Reserve statement on Wednesday. Currently, the pair stands on the level of 1.1095 by losing 0.15%. As Bloomberg reports, Federal Reserve officials are expected to reduce the number of rate hikes they see in 2016 and leave the target range for the federal funds rate unchanged at 0.25% to 0.5% after a two-day gathering of the Federal Open Market Committee in Washington. Fed policymakers will unveil new projections for the appropriate pace of rate increases for the first time since they voted to raise rates in December. Jonathan Wright, an economics professor at Johns Hopkins University in Baltimore, said the so-called dot plot will probably show a median forecast for only 3 increases this year, down from 4 in December. 3 months ago, market participants doubted the forecast. Futures contract linked to the Fed funds rate implied only 2 rate increases in 2016. Now those contracts imply the one is more likely. The resistance levels for Euro are 1.1245 and 1.1217. The support levels for Euro-US dollar are following 1.1067 and 1.0995. Yesterday, the US dollar-Japanese yen pair fell below the mark of 112.60 as the Bank of Japan removed from its post-meeting statement language used after it cut rates in January that would lower them from further into negative territory if needed. This morning, we're observing a technical correction. The US dollar-Japanese yen pair trades above the level of 113.60 by adding over 0.5%. The resistance levels for US dollar-Japanese yen pair are 113.97 and 114.54. The support levels for the pair are following 113.30 and 112.60. On Wednesday, U.S. crude oil trades near the level of $36.60 a barrel. As Reuters reports, oil prices rose on Wednesday after falling the previous session on expectations U.S. output will decline further as some producers are under increasing financial distress and as early inventory data showed a less than expected increase. Inventory data from the American Petroleum Institute showed on Tuesday that U.S. crude stockpiles rose 1.5 million barrels last week, less than half of what was expected by an analyst poll, lending markets some support. However, despite Wednesday's price rises, oil markets remain dogged by a global glut which sees over 1 million barrels of crude pumped every day in excess of demand. And analysts warned that a recent bull run, which saw crude markets jump over 40% from multi-year lows earlier this year, was overblown and largely driven by speculative traders buying crude from producers who were selling it as a financial hedge. The resistance levels for oil are $37.05 and $37.40. The support levels for US crude oil are $35.90 and $35.20. To get more trading ideas, like us on Facebook, follow us on Twitter and Pinterest, and subscribe to our YouTube channel. For more information on all the key financial news around the world, please visit our website, HiWayFX.com. Thank you and have a good trading day.